Dive into the world of finance with us as we zoom into the performance of a global banking giant, the Bank of New York Mellon. With a reach that spans across 35 countries, this is no ordinary bank. It's a titan of the financial world, commanding an impressive portfolio of $1.8 trillion in assets under management. But that's not all. The Bank of New York Mellon also has a staggering $45 trillion in assets under custody or administration. This is a powerhouse that plays a pivotal role in the global financial landscape, impacting economies and influencing markets. The Bank of New York Mellon is not just a bank, it's a financial behemoth with a global footprint. Recently, the Bank of New York Mellon has been making headlines, but why? Let's delve into their recent financial performance. The last few months have seen a significant uptick in the bank's stock price. Since August, the stock has climbed by 7.6%, and if we rewind even further back to May, that increase extends to an impressive 14%. This steady rise has not gone unnoticed, with the stock now carrying a buy rating. This is a slight downgrade from the previous strong buy rating, but buy is still a strong endorsement, reflecting the bank's robust performance. But the stock's attractive performance isn't just about price appreciation. Over the past decade, the bank has shown a steady dividend growth, a critical factor for income-focused investors. Over these 10 years, the bank's dividend has grown a staggering 144%. Furthermore, the company currently has the capacity to pay out a hefty $333 million to common shareholders, which is quite a substantial figure. The bank's recent financial performance isn't just about stock price and dividends, though. The company has achieved a 2% year-over-year revenue growth, with interest income increasing by a whopping 178% and net interest income rising by 10%. It's worth noting that the bank's investment and wealth management division saw a 4% decrease in total revenue, while the securities services division saw a 1% increase. Despite the slight dip in the investment division, the wealth management arm has demonstrated significant growth potential with a 14% year-over-year increase in client assets. The bank's net income has also seen a substantial boost, growing by 171% year-over-year. This growth can be attributed to lower expenses and provisions for credit losses, contributing to the positive trend. With promising revenue and earnings growth trends, it's no wonder the stock is rated as a buy. Numbers speak louder than words in the world of finance. Let's crunch some numbers and understand the Bank of New York Mellon's financials. The bank has been performing steadily with a 2% year-over-year revenue growth. This is a positive sign, showing that the bank is not only maintaining its operations, but also expanding. Now, when we dive deeper into the interest income, we see an impressive increase by 178%. Simultaneously, the net interest income rose by 10%. These figures indicate that the bank is not only successful in its lending practices, but also manages to generate substantial income from it. However, like any large institution, there are areas where the bank could improve. The investment and wealth management division has seen a 4% decrease in total revenue. This dip is not alarming, but it's something to keep an eye on. On the other hand, the securities services division shows a 1% increase. This may seem like a small increment, but in the world of finance, every percentage counts. Now let's look at the wealth management arm. Here we see a promising 14% year-over-year increase in client assets. This demonstrates that the bank's wealth management strategies are effective and continue to attract more clients. Finally, we notice a significant growth in net income by 171% year-over-year. This growth is mainly due to lower expenses and provisions for credit losses, which is a testament to the bank's prudent financial management. Despite some hiccups, the Bank of New York Mellon showcases a robust financial performance. A company's leadership can make or break its future. So, who's steering the ship at the Bank of New York Mellon? Enter Dermot McDonough, a seasoned veteran hailing from no less than Goldman Sachs. Appointed as the new CFO, McDonough is set to bring his robust experience and strategic vision to BNY Mellon beginning in February. This comes on the heels of the recent appointment of another Goldman Sachs alumnus, Robin Vince, as the CEO of the bank. Clearly, BNY Mellon is banking on the expertise of these financial heavyweights to navigate the choppy waters of the global economy. It's an exciting time for the bank, and these leadership changes could potentially fuel new growth and innovation. While the share prices have seen a dip this year, the appointment of McDonough may just be the catalyst needed to reverse the trend. With a new CFO at the helm, the future looks promising for the Bank of New York Mellon.